Hello and welcome to the CRU Ferroalloys and Minor Metals weekly review. Today we've got a special webcast, to say the least. So after the Minor Metal event, I'm here with Willis Thomas and Ayre, who's had an interesting trip, to say the least. So we're looking to discuss some key talking points about the event, of what people talked about and how it went. So Will, economic jitters, are they warranted? What have we heard?
So there was a lot of talk at the conference about, what's going on with the economy globally, slowdown seen across markets, prices starting to come down, and kind of just general worries about what does this mean going forward? What does it mean? How do we respond to these trends? So first thing to say is I think what we saw is a lot of uncertainty, as I say, and that's kind of what we've been seeing at CRU in the economics team. Especially in Europe, we've seen really quite a big decline in business confidence. But that hasn't. I mean, although that's kind of translated into a drop in IP, especially in Europe and South America, we're not really expecting that to kind of carry forward. We've got a few events coming up that might well serve to kind of stem the tide, if you like, slow down the declines and potentially turn us around. So obviously a lot of the uncertainty, especially in Europe, again, is coming from the worries about no deal Brexit. Obviously there have been developments recently there which may or may not prove decisive one way or another. Who knows?
We'll see in 6 months' time, right?
Yeah. Well, it could be 6 months. There's a 3-month break. It could be extended again another year, another 10 years. Who knows? So I think that uncertainty is probably going to stick around, although be moderated.
And again, we have Italy in a recession. German growth is forecasted to be lower. Talking about Europe, it does seem like it's got a tough way going forward. Yes,
exactly. So there are, aside from the Brexit, there are these well-founded worries about stability in the eurozone. What's going to happen there? But there are positive signs around. We've got election year, or we've got primaries coming up in the US, and that's obviously follow on with the presidential elections. That will normally lead to politicians wanting to almost, I don't want to say buy votes, but they want to incentivize some support.
Absolutely
true. You'll get that maybe an uptick in the US. You've got the same thing going on in India with Modi's government trying to get a bit more support ahead of the elections, and then we've recently seen a relatively modest, but still there, a stimulus package coming through in China. So those three things, especially I guess in the US and China, might well serve to hold up the markets going forward. So things aren't necessarily as bleak as they're looking at the moment.
No, true.
Well, and that stimulus package, I understand, is more end demand focused rather than necessarily completely metals intensive, and may have a little bit more lag to the market as well in terms of the metals demand. So that may play a role in what we're seeing right now in terms of the jitters.
Yeah, so it's things like reducing VAT rates and that sort of thing that will support quite a broad base support when you're doing that sort of move, but it will take time to filter through. From what I've looked at in terms of the economics, it's looking like 2019 is likely to be the low point. So what people are worried about now, understandable that people are worried, but it's not necessarily going to keep on trending downwards. There is a risk, if the eurozone does go, and if there is a no-deal Brexit in Europe, especially, that's going to cause some issues for a lot of people. But our base case view, I think, is that this is the point where things should. Well, this year, hopefully, from this year, things will start picking up.
Interesting. And I guess, Willis, moving forward, what does that mean for what they have heard? Downstream diversification, product flexibility is one of those areas where it's looking to stop this, economic slowdown, perhaps, or to support some guys, let's say.
Absolutely. So a trend that we've seen sort of gathering steam over the last year that kind of been hitting its head most recently has been the diversification of demand market exposure through more product flexibility. And that was definitely on the minds of many at the MMTA this week. Product forms that really only had like one end use before, or, a single stream same type of operation, have now been trying to find ways that they can have a product that is more flexible, especially when we're talking about EVs, new energy, or any other growing market, tend to have unusual or unique product forms. So being able to be flexible into those for producers has definitely been something they're trying to use to alleviate some of these jitters. And for quite a few of them, that was a topic of conversation. They were really looking to capture the upside of new demand. And in the past, what they produced is kind of unusable in these markets, whether it's via purity, different chemistry, or just the actual physical form of the product. This has been in battery metals like cobalt and nickel into the EV supply chain. And a specific example there was, there has been a trend from cobalt ingots to cobalt cathode. And the cobalt cathode then could be used in super alloys as well as being used and dissolved in sulfate to make battery materials as well. But we also saw these type of trends in magnet metals like rare earths for new energy uses in wind turbines, as well as looking at the feedstock market for a lot of them. They're looking to find really pure product forms to go into feed additives, which is a small but growing market for a lot of these minor metals across the board. So I think that was, in general, a way to alleviate the concerns around the economic jitters by finding more high value and more growing markets with what they're already doing, rather than focusing on trying to trade or produce new commodities. It was what do we have in-house and how can we do that better? And how can we be a little bit more diversified on our demand side?
And that's something I found interesting, the fact that, I think the vast majority of the people we spoke to are looking at that kind of what do we have diversification rather than what can we get.
Sure.
It's not a case of looking at new commodity markets to kind of dive into head first and just hope that that's going to be better than what they're in at the moment. It's about how can I make the most of what I'm doing now and how can I kind of focus that towards giving me a secure revenue line in the future going forward, even as some of the markets might be a little bit more turbulent. At least I can kind of secure some stable offtake.
Exactly, yeah. And the stability of that is key. So by having the product flexibility, you have more stability going forward, but you also get to capture a little bit of the upside, where in the past they weren't able to be exposed at all to these markets of new energy or EVs or feed additives, and they now are without completely ruining what they've been doing before. So I think that's the key is be able to have more stability in that, but also capture a little bit of the upside.
Yeah.
No, that's correct. I mean, for the past year, from looking at antimony, for example, we're seeing less and less need from the plastics side. So just because of the whole global green issues, so diversification is needed in some of these products. From selenium, we have some guys going into selenium feedstock for now, just because of the weakening manganese metal side that we did see this year as well. So on the other hand, we have this potential new technology going forward. Do we see more tellurium cadmium solar panels? The chemistry for battery metals. Which are we going to switch to now vanadium or graphite, or is it going to still be 811 on the nickel cobalt side? So
well, and it's that uncertainty that you just speak about, all these different opportunities out there, and we really don't know exactly which technology is going to take the greatest route and which one's going to take the most demand. Being able to be flexible in a product environment like this, I think, is absolutely key, and producers have been saying the same thing, whether they've been looking at this for years or they've just really come on to these ideas now that they need to be more flexible. And the selenium example, I think, is really key in all of that, because it's only been recently that we've seen the drop-off in manganese metal production, and that has driven these producers now to look into different avenues. While in the past, some of the other ones were looking at opportunities, this one's more of a challenge. So it's from both angles that producers want to get into the more flexible products.
No, correct. And in general, I mean, any other thoughts on your mind moving forward? Let's, I guess the biggest question would be, which minor metal is a good bet for next year, and it's the hardest question to ask all the time.
That would be a tough one. I don't want to say.
Buy high, sell low, right?
Yes.
So I was just thinking, with this diversification, if we tie up what Willis has just talked about with my kind of my overview of the economics. If there's all these companies making these investments in diversification because there's not much confidence, they want to secure a broader base, a wider footing for their companies, and then the economy suddenly performs better, maybe not better than it has been doing over the last few years, but better than they're expecting. How does that affect those decisions going forward? But also, I don't know. There's a lot of upside that could be taken there with a stronger growth than they're currently banking on. It's not a guarantee, but there is some reason for positivity, I think.
Yeah, and it's hard to bet on any one of them because so many of these metals, especially at the Minor Metals Trading Association that was held in Edinburgh this week, we see such a wide range of them, but I think the upside is really the exposure to the markets, to which markets are growing quickly, which ones in that bet have the best chance in terms of that, but that's more of a long-term play. The short term is really up to the individual market fundamentals, and in some of them we have overhangs and issues from both supply and from stocks and inventories out in the market, which I think it's really hard on an individual basis to say which one in the short term, but in the long term, I think it's the exposure to these new market trends that'll really show the winners and losers out of this.
So on a broad term, I guess something that we've been dealing with a lot in consulting over the last year or two, especially, has been kind of, as you just talked about, the greening of the global economy.
Yeah, sure.
So anything exposed to batteries,
look at China,
generation, and all of those kind of renewables and that whole industry. I think in the long term, you're still going to expect them to be the key kind of vehicles for growth.
Yeah, correct.
But it's also hard to put any of them out of that bet either that could do well, because there are so many optimists there about the demand for their own, for so many markets in there, that's why they want the product flexibility, because they see opportunities in almost every one of these markets. So I thought that was an interesting thing too, even with the pessimism around it. If you speak out longer term, everyone has a pretty rosy picture of their book, essentially.
Oh, great. Well, look, thanks a lot, guys. I'll keep it short, but thanks for coming along, and be sure to tune in next week to see what's going on the minor metals and ferroalloy space. Thanks a lot.